You get in the deal and get out. So you know what you're going to get, easier to qualify for, and makes it easier for you to be successful as a real estate investor. Hi, Travis Spear with Pine Financial Group, where we work together so you succeed. Today I'm going to share with you 3 more reasons you should use hard money financing for your real estate deals. When I first got into real estate and learned about hard money costs, I thought it was absurd that somebody would pay 4 or 5 points, 15% interest only on deals. But it wasn't until later that I learned that it's just a tool. In fact, when you're looking at how you're going to be profitable on a deal, you typically start with your financing to understand the amount of capital you're going to have into the deal, how quickly you can get to closing, what the cost of that capital is going to be. So 3 reasons that I see real estate investors use hard money financing is it's typically less expensive than a partner. If you look at your deal, regardless of how you're going to finance it, all cash or even with bank financing, which would be a low cost of capital, when you get to the end and figure out what 50% of that's going to be that you would take and 50% that your partner would take. Now, if you took that same deal and used it at a higher leverage product like hard money, you might find that you would actually net more by using the financing and doing the deal on your own. Another reason I see savvy investors using hard money financing is because it's consistent. You know what you're going to get. When you call Pine Financial Group, you know that we lend 70% of the after repaired value, or one of our newer loans will finance 90% of your purchase price. We're going to do that on every deal that comes across our desk, and we're going to make sure that it's a good fit for the borrower. Sometimes when you're working with banks, their appetite might change depending on the type of deal you're working on. They may not like the location, they may not like the rents, they may not like the income that you posted last year on your tax returns, so they might change the deal a little bit, making it more difficult for you to get the deal closed. And of course, bank financing takes a little while for appraisals and time to get to closing. You have to decide whether or not that timing would work well for your deal. The other piece about when we talk about banks, another reason savvy investors are using hard money financing is because it's easy to qualify for. When you're working with a bank, they're really going to look through everything. They're going to look at tax returns multiple years, bank statements. They're going to want to know where deposits came from. They're going to dig into maybe your paychecks or W-2s, maybe ask that a significant other or spouse would sign on the deal to make sure that they're in a really good position. And they're likely going to be at a lower loan to value and want high amounts of reserves so that they know you can handle the project if there's a problem. With hard money financing, we'll finance a higher loan to value, 70% of the after repaired value, and because we can do that, you'll have less money into the deal, leaving you the money to service a loan. Our reserve requirements would be significantly less than you would see at a bank or more traditional financing. Short term, higher costs, you get in the deal and get out. So you know what you're going to get, easier to qualify for, and makes it easier for you to be successful as a real estate investor. If there's a deal that we can help you with, we'd love to at Pine Financial Group. Check us out at pinefinancialgroup.com. If you're checking this video out on Facebook, please share, like, and check out our page. If you see us on YouTube, hit subscribe or the notifications button so you know when we're putting out new content. We'd love to help you with your deal, so please contact us today. Thank you.